it's gonna be really fast because I really want us to have time to go through questions, okay? Because I think that's where a lot of the value will be. Let me know if you can see the screen. Thumbs up.
Yes.
Okay, perfect. So what I'm gonna do is just to share about what is happening out there in the US today. And the first thing that I always tell my client or even prospective client is, if you start thinking about your business or even your personal finance as a publicly traded company, your life will change. And here's why. Publicly traded company, right? Let me ask this. Who owns a share on a public company? Just raise your hand, give me a thumbs up. Yeah? Anyone invest in mutual funds? Do you have mutual fund? Right? All right. Do you have a retirement account? Okay, there you go. A lot of us. And basically, whether it's retirement account, mutual fund, or owning a stock, all these are in publicly traded company. And every quarter, they have to report to the public how the company is doing. And when the company is not doing well, the stock goes south. When they are achieving their objective, the stock goes up, the value increases, right? And if we think about our own business the same way, what objective, what deadline, what target do I have for this month, for this quarter, for this year, for the next 5 years? Our approach to business changes, right? This week, I had a conversation with a client who is making a lot of money in one business and not so much in the other business. What I asked him was simply, do you have target with the other business compared to the one you're making a lot of money? And this answer was simply, no, I don't. And we developed some deadlines, some targets, some milestone that he has to achieve for the business. And that was enough for him to start building marketing strategy to achieve these goals. So you might be wondering, okay, we're supposed to talk about taxes. Why this matter, right? Why the target, the deadlines, the objective matter? Simply because a lot of people think about taxes in not helpful or useful way. And they think about taxes between January to April 15th, or this year was May 17th. That's not thinking about taxes. That's what people who pay a lot of taxes do. That's called tax compliance. You're filing your tax return, you're sending your 1099 to your vendors, to your independent contractor, you're filing the W-2s for your employees. That's called tax compliance, okay? Tax planning and tax strategy happens throughout the year. It's how do I find ways to reduce my taxes? And to do that, you have to know how your business will do in the next quarter, in the next 6 months, in the next 1 year. And based on my projections, how do I make sure that I am paying myself enough? For a lot of us, we might have to pay for our own health insurance. If you pay for your own health insurance and you claiming schedule itemized deduction, you might not be able to deduct it. But as a business owner, as I will show you here, you can deduct anything you pay for your health insurance. So it's really important to understand the bigger picture, the deadlines, the targets, and based on that, we do our tax planning. That's what I do with my clients. So here's some of the things that I really want us to look at why tax planning really matters. According to the CNBC, about 95% of small business owners overpay taxes. Just think about that. And if we're saying 95%, so in this call, we are about 8 people. 95% means 7 of us are overpaying taxes. So I don't know who's that one person who's not overpaying.
Yeah.
So, but that's the statistics. And the second statistics that I want to point to our attention is how the the affluent Americans pay at least 5% less in tax rate than the average American. So, and this is not a criticism towards them that they are doing something that they shouldn't be doing, but it's to say that they are using some strategies that are available to all of us, but we're not using them. So I don't know how many of us followed a couple of months ago, um, Pro Republica published an article that literally showed how the billionaires in the US are paying incredibly low tax, around like 0.5% to 5% maximum. But although they are wrong in their calculation, that was actually inaccurate, unfortunately. But the truth is, they are still paying lesser than the average American. And the last statistic that is really concerning to me, because my parents fall into that category, is that more than 50% of people reaching retirement age or past their 50s, they do not have money enough to retire, and they have to work for most of their life. My wife's grandma, she's 74, but she still works. So all these things are part of our lives, but the question is, how do we make retirement affordable? And as business owner, we are in the right place to do that. And what I'm gonna do here is just to go through some of the commonly missed deductions and then show us how these things impact our lives. The reason I chose these deductions is because all of us spend money on them, right? All of us eat, all of us have a car or use public transportation, all of us have a home, all of us travel occasionally. One of the biggest expenses is healthcare, and we want to retire. So I'm gonna start with these 6, and then we're gonna talk about some of the most prominent strategies, okay? So when it comes to, let me share another screen here just to actually show us all these deductions. So let's start with the home office deduction. Who has a home office? You can unmute yourself. Okay, great. Are you claiming that deduction in your tax returns?
No.
No?
Will be.
Okay, good to know. You will be. Bernita, do you want to tell us why you're not claiming your deduction?
I was doing it, but my tax person, I was trying to think of why she said that I shouldn't or I couldn't. I can't even think of the reason. I was at first, but then she said, I thought she said like I had to use my office like all day or something. I forgot.
I'm in the same boat, BJ. My tax accountant as well said don't use it unless it's a full-time office. It has to be certain, or she said it had to be a certain amount of square footage or something.
Okay.
Yes, exactly.
Let this mystify that. Okay, the home office deduction. So, sorry, I'm just checking how much time we have left here. So when it comes to home office deduction, here is a lot of accountant or tax preparers are really conservative, right? our job as accountant is not to protect ourselves. That's why we have, insurance liability, or, we make sure we're doing things within the legal framework. But when it comes to serving you, we have to work on your best interest. And your best interest is to reduce your taxes legally, ethically. That's at least my approach. So this is what the IRS publications and regulations says. You can deduct your home office as long as you are using that home office on a regular basis. But here's the thing, they don't define what is regular basis means. You have to use your home office as an exclusive space in your house. So I'm gonna tell you what I do. Let me remove my background to show you my home office, okay? It's a little bit messy in the background there, but I just want to show you the point that I'm talking about. This is my home office. I have my desk there, my filing cabinets, and in front, I have my desk here. I use this space regularly. If you're using your home office at least 12 to 15 hours a week, that's fine. It doesn't have to be full-time. Understand me, please. It doesn't have to be full-time. But you also have to use this space. You also have to use this space to conduct your management activities or your admin activities. What is that even supposed to mean? Okay. What is that supposed to mean, admin and management activities? Do you make phone calls to clients? Do you pay your invoices in that space? Do you recruit people, employees or independent contractor? Do you keep your bookkeeping in that space? Those are what is considered running your business. Let's say you have, for example, a daycare in your home, right? You use the space during the day, and then at night it's a family living room. You can deduct the portion of the day you use for your daycare business. If you are, for example, a contractor in real estate, for example, right? You go out to do most of your work and you come back home at night to do the admin work, to bill the clients, to make phone calls, to schedule appointment. That's your office. And if you're not claiming that, you're not doing your taxes correctly. So for some of us, our tax preparers are actually filing incorrect tax returns because the IRS said you have to claim your eligible deductions, okay? I'll tell you a story that I'm actually currently working on. One of the clients that I have, in the last 2 years, they filed their tax returns without claiming most of the deductions. And they paid a lot of taxes. And home office is one of them. She uses 200 square feet in her apartment of 800 square feet. That is 25% that she could have been taking off deduction, but she hasn't been. So how do you claim this deduction? There are 3 ways. The simplified approach, where you claim $5 for each square feet you use, up to 300 square feet. In my apartment is 1,120 square feet. And this
Excuse me.
office is about, yes,
Just so you're aware, you're at 20 minutes. Okay?
20 minutes left.
Yes.
Okay, perfect. Thank you.
You're welcome.
And I use 150 square feet. All the expenses of my apartment, the HOA fees, the mortgage payment, the interest on the loan, the repairs around the house, about 16% of this expense I deducted for the year. So this is just arbitrary numbers. If per year I paid, let's say 18,000 in for the house expense, I can claim 3,429 to reduce my taxes. And the second option is the regular option that I broke down the different expenses. And the third option is room approach, where you have approximately equal size of rooms and you get to deduct the room you are using as an home office. The second approach is the healthcare. For healthcare strategy, I really want every small business to have a health savings account. Basically, think about your IRA account, but for healthcare. My wife and I, we have a health savings account and a high deductible health insurance because we don't have a lot of healthcare expenses. So a lot of our money, instead of paying it to the insurance carriers, we put them into health savings account every year, and it's gonna be growing. If we die in the future, that can be transferred to our future kids or whoever we decide for them to have. And that money can also be used for your retirement after 59 years old. So, it's money that reduce your tax bill that is not taxable as long as you use it for healthcare. So for people who only have a W-2, they really can't claim most of their healthcare expense. So when I meet with clients, we look into all these different areas and we start looking into areas of their life we can create tax planning strategy. Health reimbursement arrangement is if you have high healthcare expense. Basically, your business will reimburse you for all the healthcare expense you have out of the pocket for healthcare costs. So I love to set this up for people who are advanced in age, who are above 40, 50, who have some health care needs that requires a lot of expenses. So when we set this up, let's say you had, unfortunately, a very expensive procedure. If you're just using the health kit, your W-2 income, you can't really deduct much of it. But if we set up a health reimbursement arrangement, you can deduct all of the expense you incur. Wouldn't it be nice, the government, to subsidize your healthcare needs? That's what deductions are, right? So your insurance, if you are an LLC, a sole proprietorship, an S Corp, or a corporation, depending on how your business is set up, can be 100% deductible. But if you're just an employee, it's not gonna be 100% deductible. So it's important to pay attention to that. Meals, I'm not gonna talk much about it because it's this year, 2021 and 2022, 100% deductible. Make your meals business expense. My wife, I had to force her to create a business. When we go out to eat, it becomes a business meal and we write it off. You have friends, invite them to be part of your business as board of advisors. When you go out to eat, your meals become deductible. There are a million strategies that if we had time, I could have shared with you where we can make your tax go down to zero and even get a refund if you pay your quarterly estimates. Okay, that's why that statistics of 95% is really shocking to me. The retirement approach, if you only have the Roth IRA or traditional IRA, you're not doing it right. What you want to do is to either create a simple IRA or a SEP IRA because it gives you more ability to pay money towards your retirement. I have a client who last year made 250K, but they also had a tax bill of 50K in taxes. I told her, you didn't do things right? Because she engaged me this year in the midst of this year. And I was like, last year, your accountant should have told you before December, you need to create a solo 401k or a SEP IRA. We could put 58,000 into your retirement and artificially reduce your tax bill to maybe 10K just with retirement, right? So those are the things that are happening out there, right? That is not about how many years someone have been preparing taxes. There is a lady here in Chicago, she's been doing taxes for 35 years. And she reached out to me because she wanted help to think about how she can help her client reduce their tax bill. As I mentioned, I have 3 years in this space. She has 35 years. It's not about how long someone has been doing it. You can be proficient in doing something wrong. It's about how much research people are dedicating, how much effort they are keeping up to date, learning strategies, learning ways to serve you better. That's why even when someone doesn't want to be my client, I help them to learn how to interview professionals. How do you interview an accountant to meet your needs? How to interview a lawyer to meet your needs? Because you might be in a stage of your life that someone who has been doing professional service for you may no longer be suitable for your needs and your family and your business needs. Right? So just think about this. One strategy that I want you to take today is the CCorp election or the CCorp election. We're really running short on time. My plan to have a lot of questions at the end might not be actually a possibility. But if you have a professional, I want you to ask them how to make a next election. If you're, how many have an LLC or are operating as a sole proprietorship, just by a show of hand? Okay, great. Sina, great. Awesome. So if you're making at least 40K a year, you are already overpaying taxes, because look at how you get taxed. See this first column? Let me increase it. Here, you get taxed on the entire net income. And this is what you pay, 15.3% of self-employment taxes. And then in Illinois, you pay state taxes of 4.25% that I didn't account here because I thought about other people might be in different states. And then you pay the federal income taxes depending on your marital status, right? What you're taking at the end of the day is significantly smaller than if you had a S-Corp or a C-Corp election. Because under these two, what happens is we make you an employee in your business and we pay you a salary and you pay taxes on the salary. And then the balance flow to be taxed. So basically you could have been saving 20% of your taxes. Just think about it. If you're paying 20% less of your taxes, wouldn't you put that money into your retirement or into traveling or kids' education or opening other business? Taxes is all about creating your possibilities, right? So let's go back into the other strategies. I really love real estate.
Excuse me, you're down to 10 minutes.
Okay, awesome. I'll mention this and then I'll open it for question. In the real estate space, oh, I probably should also talk a little bit about the traveling deduction and then we'll close. Real estate is an absolute have for small business. You're a small business, buy a rental property, okay? Just find a professional to help you buy the right property, because of this depreciation. The reason I love real estate is because of depreciation. Even when it makes money, it always creates losses on paper. And these losses can float your tax return and we make your tax bill disappear. This is just an example. I can forward to all of us. I created a tax planning guide that I can share with all of us at the end of the summit. Let's go back on traveling. All of us do travel. The way to make your travel deductible is very easy, easy peasy, believe me. My wife and I went to Michigan twice over this summer. If I was a common person, what I would have done is just drive there and use the travel as a personal expense, therefore not deductible. What I did before the travel was to reach out to other businesses in Michigan. Before the travel, I called them, I scheduled some meetings so that I can make that a business trip. When I got to Michigan, I talked to business owner, I prospected a little bit, and I converted that personal trip into business trip. After my meetings with these clients, we went to my wife's family. We had a great time, and all these subsidized by the government. So how do you make your business trip, your trip deductible? Try to make your trip, excuse me, as a possible meeting with clients or vendors, or if you're attending a conference or training, or if you have a rental property, again, real estate is important, right? I have a friend in Michigan who always travel in summer to North Carolina, and all of the expenses of driving to North Carolina with 4 kids, renting a space is not really helping them. So I reached out because I love him. I said, hey, have you considered buying a rental property in North Carolina? That way, when you travel, you stay in that place, and throughout the year, you rent that house. When you drive to North Carolina, you make your trip deductible because you're visiting a rental property that is a business, right? And you're doing some work around the property. And now they save $12,000 in taxes because of that property. It's incredible the miracles you can make. So try to at least check some of these boxes, right? And all of the expenses, whether it's a car rental, an airfare, whether you use Uber, Lyft, parking, valet, even your laundry. If you get your laundry done that when you're traveling, it's deductible. If you feel like you don't want to do laundry in your house and you're gonna be traveling, just take all of your laundry and do it there. Deductible. Okay, that's a little bit extreme, but yeah, you got the point, right? So unfortunately, I really want to give you some time back to ask questions. The meals is there, it's always gonna be there, right? The auto expense, unfortunately, we can't really go through those, but please ask me questions. Yeah. If there is no question, I can continue on the tax strategies that we didn't touch, like startup deductions or the auto expense.
Okay, and we're at 5 minutes.
I would like to hear about the startup deduction, so,
The startup deduction, okay.
yeah.
So the startup deduction, what I usually tell clients is, hey, keep your expenses within $5,000. Because any expenses you incur when you're opening your business up to $5,000 is completely deductible. If you spend more than $5,000, for example, you rented a space, you hiring people, the open house ceremony, to pay for accountants or attorney, all that is deductible in the year you start your business. But your tax preparer have to make an election to treat these expenses as a startup election, right? Because if they don't do it, all these expenses will be capitalized. Capitalized means will be put as an asset instead of an expenses, and then they will be prorated for 180 months, basically. So what I usually do when I meet with people when I start a new business is to tell them all of these expenses. Don't be afraid to spend money on this consultation, because we're gonna get them deductible in the first year of your expenses, as long as it's within 5,000. Okay. So the guide that I created will have a little bit more detail on these. You can always refer to them. But this workbook here, I use it for my business when I go on tax consultation with clients. We go into each strategy depending on what they're trying to do. Diane, does that answer the question?
Yes, thank you.
Yep. Any other questions? Okay, it doesn't seem like there is one. Let me jump back into the auto.
Sorry.
Yep. But
Well, it's not a question. I just want you to restate when you were talking about the square footage deduction.
yeah, okay.
Did you say it was $5 for how? Well, how does that go again?
It's up to 300
Oh,
square feet.
300 square
Yeah,
feet. Okay.
that's if you take the simplified approach. I hate it.
Okay.
I don't recommend it. I prefer for my client to use the regular option, which
Okay.
is, we do a good job with bookkeeping throughout the year, and all the expenses incurred for the home, we prorate them per the, let me increase here the size. We prorate them per the percentage you can claim of the office, right? For example,
Okay.
for my
Got you.
case here, and the other thing is the spaces of the house, like closets or hallway, these do not count. So we have to, deduct these. That's why this method and the room option usually yield greater deduction than the simplified
Okay.
option. Yeah.
Okay. Thank you.
Okay. So quickly on closing, the auto approach, if you're planning to buy a new car, a very expensive one, I want you to meet with a professional to ask them for the auto strategy, because you could write off 100% of the cost of the car.
Okay, we're down to 50 seconds.
Okay, I'll put it there. Try to meet with your accountant, your tax preparer advisor, and ask them about this strategy. It's gonna save you a lot of money. Please do it. All right, so
Outstanding.
we're done here. I hope this was valuable to you. Do not hesitate to reach out if you have questions. I'll put my information in the chat.